All right, so today we have on Jack Gia, who is the founding member and director of sales at Wyre. Jack and I came to know each other through an email introduction from, I believe it was, who is the CEO at Wyre now?
Oh, that's Michael Dunworth, actually.
Michael, yeah. So he and I had a short email correspondence. And yeah, he suggested you guys for a podcast, and I love the idea. So happy to be on, Jack, and welcome to Around the Coin.
Yeah, thank you for having me.
Yeah, it's my pleasure. A little bit of the pre-show, we were talking about your background with Wyre and the rebranding from Snapcard, and then even before that, as your experience as a founder back in 2012, 2013. Can you give me the quick what Wyre does for people, what the value proposition of the company is now, and sort of the general state of affairs, the size of the company, and where you guys are located?
Sure, yeah. So Wyre is founded in 2013, but currently, we focus on basically being the simplest bridge between the fiat world and the blockchain world. So you have a lot of different dApp developers or smart contract developers that build something natively on the blockchain, and there's no good way to interact with the fiat world in terms of debit cards or ACH or local bank rails, stuff like that. So Wyre kind of compiles all that in terms of the fiat world infrastructure compliance for KYC AML, and just makes it easier for developers to interact with the fiat world.
Yeah, that's awesome. And you guys are how big now?
Yeah, so we are a team of 30, headquartered in San Francisco. We do have like a small office in Beijing and Hong Kong as well. We do a lot of work out there with our Asian partners. There's some payment companies in China that we work with. We also have some remote guys working like in New York, in Miami, and Minnesota.
Okay, so the company, as far as I understand, started off as something much different than what it is today. Can you walk me through that transition from founding member early on in those days, and what that story was like to where you are now? I take it was quite a different ambition from the early days to where you guys are today.
Yeah, absolutely. Yeah, I mean, I think initially starting out in 2013, the whole industry was just probably more innocent in terms of more optimistic about merchant adoption, or when the first bull run to $1,200 per Bitcoin came in 2013, that's when I personally found out about Bitcoin in general. And soon after, I joined Mike and Yanni, the co-founders, as the first employee on the team. And at that time, we were out of Boost VC in San Mateo with Adam Draper. And there was a lot of teams that worked out of Boost VC in Hero City there with Draper University. So it was very fun to, be engaging with a lot of other crypto heads early on in 2013. And, the product that we built at the time was simply a bookmarklet, kind of like a Chrome extension that laid over the internet, such that when you go to eBay or Amazon and you wanted to shop on those sites and pay with Bitcoin, you weren't able to before, right? But with this widgets, basically you were able to, pay with Bitcoin. It would show up in your Snapcard accounts. We would actually go behind the scenes to purchase the item and ship it to you. And then I think we actually used BitPay's API at the time to cash out the Bitcoin to USD. So that was like the first version of Snapcard, and we were loved on Reddit, and everyone kind of loved us for doing that. And we were very optimistic about, how merchant adoption was going to just kill it, right? And I think even though in 2014 there were some big merchants that definitely adopted Bitcoin as a payment method, it never really took off. And even now, I don't think it's at the order of magnitude that it can be at some point in the future. But yeah, so I mean, for us, we started doing basically e-wallets and merchant processing using Bitcoin, Litecoin, Ripple, and Dogecoin at one point. 2014, 2015, which was kind of the year of blockchain, not Bitcoin, with a lot of different kind of enterprise blockchain solutions that came out. And it was sort of the first crypto winter, right? So for us, it was not really a viable business, even though we were loved by the community, and we were doing a lot of different great things in terms of building out like a payout API or a Bitcoin payment API. We add a lot of infrastructure in terms of payout mechanisms locally so that we can do local disbursements. Once you take the Bitcoin and convert it to USD or euro, you can actually pay out and do the merchant settlements. Right, I think looking back now, it makes a lot of sense for us to have built out that infrastructure because it's now very relevant to have that infrastructure. But at the time, it just wasn't a very viable business model. So I think it was in December 2015 when PayPal approached us for a hackathon, and we kind of looked at using crypto as a rail to do cross-border payments, and realized that you can derive these synthetic FX rates by going from fiat to crypto in one market and then crypto to fiat in a local market. And what that does is it will achieve a lot faster cross-border payments and actually get better rates. So we proceeded to kind of explore that even deeper and work with some established traditional FX companies and realized that there were some exotic currencies that they weren't very good at paying out to, such as Mexican peso or Brazilian real or Chinese yuan. So we went on to kind of build out this core FX engine using crypto as a rail in the back end, abstracting all that so the users still get a fiat to fiat on the front end. And that's when we kind of pivoted to Wyre, right? Wyre, obviously, with wire transfer. And that was very good for us. It wasn't susceptible to the macroeconomics of the bear and bull run in crypto. And we were just doing FX payments, but using new technology.
Wow. Yeah, quite the experience. It sounds like both the Boost VC and the PayPal 2015 hackathon were pretty pivotal moments. You mentioned the synthetic FX rates and rails. What exactly is going on there if you sort of walk me through as a customer standpoint, I have Bitcoin in my wallet, let's presume that's the starting point, and it ends at somebody else's wallet. How exactly does the synthetic FX rails work?
Right. So, if you think about something like a TransferWise or a Western Union, when you go to those platforms, what's actually happening on their backend is they're simply working with a bank to commit to buying, let's say, $1 billion in FX per year, and they will get, let's say, 0 to or 3 to 5 bips on the spot rates, right? So, for example, if you go to like Yahoo Finance right now and you look at the exchange rate for British pound to US dollar, right? Whatever that rate is actually just what's called a mid-market rates. And then on top of that rates, usually these traditional FX providers like TransferWise will be able to buy FX at wholesale and basically resell it at retail. And I think they charge like 1% to the end user. I think that's already a pretty good service because, at 1%, that's not that much fee to pay. If you actually just went to your bank to try to do FX payments, you will realize that you're actually paying 6 to 8% when you compare it to this mid-market spot rate. So, when you go to these services on the front end, the rails that they use on the back end are actually just traditional FX rails, right? In terms of buying at wholesale rates and selling at retail rates. And they're still going through, Swift or perhaps as local bank rails. And they will have to manage a lot of float around the world in order to achieve time efficiency, right? Meaning that, if I'm in the US and I'm a migrant worker from Brazil and I'm trying to send money to Brazil and I'm using TransferWise, what's actually happening is TransferWise simply has some BRL sitting in Brazil, and when they debit my debit card in the US, they will not actually move that USD to Brazil. They will just hold it in the US, and they will use their BRL float, Brazilian real floats, in Brazil to do the last mile payouts.
Got it. So it really requires that the TransferWise in this case really has to have a significant bank account in each of the different countries they operate in at all times in order to make that transfer pretty quickly. Is that a big challenge for them to just keep that liquidity in those accounts?
No, I think that's what causes a barrier to entry for other players is that large floats, right? So, and if you can use crypto in the middle now, suddenly you don't have to have that float because let's say you need to move $1 million rather than actually having $1 million on the other side waiting there, which is a very high capital cost that you have to have. If you were to use crypto, then you can rebalance every 30 minutes and not even have $1 million to begin with in terms of capital flow to complete the payout. So I think crypto definitely helps to lower the barrier to entry for other players into the financial space.
Got it. That makes a lot of sense. That really is got to be one of the biggest promises of crypto. Not promises, but the actual deliveries is that, sending money across borders is just as easy as sending money to somebody right next to you. So in your case, or in the case of Wyre, so we'll start off the same way. Somebody, instead of using TransferWise, where there's floats in every different country and balances that have to be deducted, there's a situation is that the person at Wyre who, say, wants to move money to Brazil, they're purchasing Bitcoin, or how do they go from, say, they're starting in US dollar and they want to end in Brazil? What's the Brazil currency?
Brazilian real.
Brazilian real, yeah, that's right. So walk me through again the Wyre protocol, or the Wyre steps to go from US dollar in a bank account here to my friend's real in his Brazilian account.
Yep. So this will be the retail FX dashboard that we actually sold to World First, which is another really big cross-border payment company. But basically what the user would do is they would just come onto Wyre, create an account, right, submit their KYC AML, which is know your customer, anti-money laundering, in terms of just their name and user data, right? We have to verify that they are who they are and they're not a terrorist, or they're not funding terrorism or laundering money. So just standard KYC AML onboarding. And once they're onboarded, they're able to fund their account in USD. And let's say, they're doing a B2B payment because they're buying some sort of product and reselling in the US, and they need to do $20,000 to pay their suppliers in Brazil. So they will send Wyre $20,000 locally in the US, which is much cheaper using local bank rails here than doing international SWIFT payments. So they will send it to us and top up their account with that $20,000, and they will literally be able to see an exchange rate from USD to BRL, and basically put in their recipient's information, simple KYC, right, and go from USD to BRL. And that's all they see. They don't see Bitcoin. They don't see other crypto assets. All they see is USD to BRL, an exchange rate, which we actually offer mid-market rates, on top of which we charge 0.75% service fee, which is very competitive, I think, for retail FX payments. And that's it. And on the back end, what's happening is we would basically take that USD from the user, convert it to Bitcoin or Ethereum in the US markets, and then shoot that Bitcoin over to an exchange in Brazil and convert it to local currency, which is the Brazilian real, and then using a licensed third-party payment company to help with the last mile disbursements. So all of that is abstracted, though. All the user sees is USD to BRL.
Got it. Okay, so you would send the Bitcoin. Wyre would send the Bitcoin from the Wyre account to a third-party account in that country, and I imagine that's the setup for the variety of countries out there. There's going to be a third-party provider that will receive Bitcoin, and then they will send the local dollar to the recipient.
Right. So this is the whole kind of how would you call it? The exchange infrastructure that's being built up around the world on a regional level, right? So you think about something like Ripple or Stellar, and Stellar has different anchors around the world, and Ripple also utilizes local Bitcoin or local crypto exchanges as basically anchors as well, right? And because either way, you're gonna have to find these local market makers and exchanges to convert the crypto to fiat or the fiat to crypto. So whether you use Stellar or Ripple or not, you're still gonna have to go through a crypto exchange for liquidity. We have opted to use Bitcoin and Ethereum because that just has the deeper liquidity for us to achieve higher price efficiency for our users.
Got it. That makes a lot of sense. I mean, this dramatically improves the really remittances across the world in a huge way pretty immediately using crypto. And like you said earlier, the nice part for Wyre, at least, is that you're not riding the volatility of the crypto boom and bust, which, for a lot of people out there, I'm sure has been a painful experience the last year. That's pretty exciting. Where do you see things going from this point, or what's the future for Wyre, or maybe even more broadly, remittances or foreign exchange?
Yeah. So, I think for Wyre, number one, this is FX payments has become a stable business at Wyre. We work with 10 financial institutions right now that use our API to do FX payouts, and it's a very stable business here at Wyre. I think after 2017, with the whole ICO boom, And in 2018, with the crypto winter or bear market that has kind of come on now, we saw a need to kind of help different crypto companies with the infrastructure that we built up. So, cross-border payments, if we're using crypto to do cross-border payments, really the industry that we're serving is the cross-border payment industry. But if we bring all of that infrastructure back into crypto to help crypto companies, that's very different, right? So I think what happened in 2018 is we realized that there was a need in the crypto industry for different companies to be able to scale and go mainstream, and they were all missing an element of compliance, an element of liquidity, an element of fiat on-ramps, and that's all stuff that we have built out over the past few years. So we kind of not pivoted, but kind of had a company refocus, whereby we're still working on cross-border payments, but we sold the retail business to World First, and we're still doing cross-border payments at the API level, but we kind of revamped our API in such a way that we can help crypto companies to onboard their users. So if you use our API right now as a crypto company, you're able to have a master account and kind of create accounts for your users and pass us their KYC AML, or the user would pass their KYC AML to us, and we're able to use our in-house compliance team to verify those users, underwrite them, and allow them to transact between their payment method, like their bank account or card, and their non-custodial wallet, like their MetaMask or Ledger, right? So for this past 9 months, since like Q3 2018, we've been more focused on that side of the business. And so for example, we added MakerDAO, the DAI as a stablecoin, as a core currency in our core API. We're working with AirSwap, which is a decentralized exchange. We're working closely with 0x and all the 0x relayers, and just other dApps like gaming and collectibles such as OpenSea or Got on Chain, right? So every dApp, decentralized application in the space, they all face a similar issue in terms of if a user doesn't have ETH to begin with, how do they get it, right? Well, they have to go to Coinbase and they have to sign up for an account there. They have to wait 3 days before their account is approved. They will have to wait another 3 days to fund their account before they can make a purchase. And after they make a purchase, they will have to ship the ETH over to their MetaMask in order to use the dApp, right? So that's a huge hurdle for a dApp developer if they wanted to, acquire users or help users to onboard onto the blockchain and take advantage of all these awesome protocols, right? So that's kind of the problem that we're solving now, is kind of reducing the hurdles to help first-time users to onboard onto the blockchain.
Yeah. Effectively, it seems like it's building that on-ramp to go from fiat to crypto, but directly for the dApp instead of for a centralized location, like you said, Coinbase.
Correct, right. So we're definitely taking a more open source approach, right? I mean, as a money transmitter, we obviously are a centralized service, but by the same time, we're trying to make our product as extensible as possible.
And as a money transmitter, does that mean you have money transmitter licenses in every U.S. state, or is it even U.S. focused at this point, or is there other countries that are bigger than the United States?
Yeah, that's a great question. We're definitely very focused on the U.S. right now. So Wyre is operational in 42 states in the U.S., and we're hoping to finish getting our money transmission licenses in the remaining 8 states, so that by the end of 2019 we can operate in all 50 states. We're also licensed or registered with Austrac in Australia. We're also a money service operator in Hong Kong, and we're almost about to get our e-money license in Europe and UK. And we already have very strong banking partnerships and relationships in those countries for doing last mile disbursements for FX payments. The first mile and the last mile is a little bit different, right? Because when you do a last mile payout, oftentimes all we're doing is powering another FX company that already has their own first mile pay-in mechanisms and KYC AML procedures. And all we're doing is helping them to complete an FX payout. Whereas for first mile, onboarding a new user and underwriting them, that's a lot more complex. So even though we have the banking infrastructure in other countries and we already have licenses in those countries, we're much more focused on the US right now, just because we really want to make it a great experience, right? So in terms of onboarding a user and them passing in, their name and birth date and address and passports, and having that automatically verified so that they don't have to wait at all, and be able to kind of get their crypto within a minute, right? We have some internal SLAs on our site for what we want to achieve this year. So what we would really want to do is to focus on the US, kind of automate the entire onboarding procedure and underwriting accounts, make that scalable, and then kind of replicate the model in other countries.
And is the U.S. attractive from your perspective because of the size of it, or just the money that individuals have, or the number of developers, or just familiarity with the process, or regulatory reasons? I'm curious. I've seen a lot of other companies start to focus, a large part of their attention, or even exclude the United States for a variety of reasons. With you guys being fairly international, you have other countries that you operate in, but seem to be based in the U.S. and U.S.-centric to some extent. I'm curious to hear your thoughts on the U.S. as almost like, in a way, the United States is competing, in a sense, for market share for crypto companies against other countries, and I'm interested to hear what you think, how you think the United States is doing in that.
Yeah, no, I mean, US, I think, is definitely where everyone wants to go, but nobody knows how to enter, right? There's a lot of regulatory uncertainty right now, with the SEC, with ICOs that are, supposedly securities, and how does that work? People embracing security tokens and going the full route on that side, like open finance or Securitize and Harbor and all the real estate asset tokens. I think, US is definitely a very hot market, and everyone wants to be able to crack it, but it's very hard to crack, and you can end up kind of putting a lot of resources into it and not get anywhere. And that's kind of why we're focused on it, to kind of bridge that gap. On an international level, I think, it's a very fragile moment right now in the world for crypto, right? Because, is the world going to get ahead of the US, or is US going to maintain dominance in this particular industry? I think both can happen. There's been some progress recently, I would say, from the SEC in providing some clarity. Still not enough as to why everyone is going overseas. It's just easier, path of least resistance. But ultimately, I think everyone would like to come to the US, and that's why we're focused on it.
Yeah. Do you think the U.S. when you say the U.S. has a lead, or the U.S. is ahead of other people, are you defining that as the whole financial industry, basically the power of the dollar, or do you view the United States as actually being a leader from a regulatory standpoint for crypto specifically?
Yeah, and I mean, I think since 2012 or 2013 until now, that it has been all eyes on U.S. or China, right? And China obviously took a much harsher stance in 2017 against all the ICOs, so it's not as talked about nowadays. So all eyes are on US because everyone wants to know how to go to market here. In 2013, when the whole Silk Road thing went down and Bitcoin started being categorized as money and being regulated as money, basically, that's provided clarity to different industry players like BitPay, like Coinbase, and they said, okay, cool, we have to get our money transmission licenses, and whether we're doing payment processing, we're operating a virtual exchange, FinCEN is looking at this as basically money transmission, right? So that gave clarity to operate, and I think that's what kind of propelled U.S. players ahead, right? So whether that's Abra or Coinbase or any other, or Kraken even, or any other crypto company, you think about their market value right now, U.S. is still ahead, I think, in that sense. And as far as, the financial industry at large, obviously U.S. is ahead of everyone. and as far as what decentralized finance is doing, or at least within the Ethereum ecosystem, with all the different smart contracts that are built to replicate real world use cases, you want to figure this out in the U.S., right?
It is interesting. I mean, from the U.S.'s standpoint, having China being just a massive influence in the world economy, seeing them take such a harsh stance against crypto, I wonder if that pushes the social fabric of the United States against China in that sense, and more towards an open cryptocurrency policy, just to differentiate pragmatically from China, or if they end up eventually moving that same direction. I also think about the early days of Silk Road being a beneficial influence on the crypto world today, in the sense that, early days there's no rules, the technology launches, and then it's going, it's going well, and then something sort of has to happen for regulators to step in, and that something was Silk Road, and that was the initial backlash, or that's the initial reason to justify the intervention. And Silk Road was, it was a serious deal, and there was some very, very shady stuff going on there, just blatantly illegal stuff. But in some ways, it didn't knock off the industry so big that it couldn't recover. And luckily, it happened early enough to where many companies started developing their practices and their tools and policies later on. So I almost wonder, I just sometimes try to critique where crypto is categorically, if it's headed towards a path of greater adoption in the world, in particularly the United States and regulatory standpoint, and other countries, or if we're headed more towards a dark path of banishment of the technology. Do you have a reaction to that? Do you feel one way or the other strongly?
Yeah, I mean, I'm very pragmatic when it comes to this. I don't have very strong opinions in terms of either hyper Bitcoinization or hyper, DeFi, and everything kind of gets replicated synthetically on the blockchain. I take things as they come, right? Because, for example, on one side, something like a Chinese government can definitely turn blockchain into completely the opposite of what it was intended to be in terms of this libertarian vision of freedom and kind of censorship-free transactions and all that, right? Because they can literally come in and issue their own stablecoin backed by the People's Bank of China. They'll be able to track everyone, and if you're a dissenter, they can literally wipe your money. They don't have to seize it from your bank. You cannot move it overseas. They can literally just burn your tokens, right? And that's a very scary thought to have when you think about what the PBOC is doing, which is actually researching and launching some sort of government-backed fiat stablecoin. And then on the other hand, you have this utopian world, if you will, of just crypto and libertarianism and P2P transactions, and everyone kind of discussing on their own terms and kind of transacting with each other in this open ledger, and no one can censor it, and it can sort of it can do a lot of great things for the economy at large, right? And increase efficiency for a lot of private placements that now can have more liquidity. So whether that's traditional assets like real estate or this is the dream of the security token world, right? Is kind of putting everything on the blockchain and deriving efficiencies from the trade and settlements. In that scale between the two, I have no idea what things will end up. I'm sort of like a closet Bitcoin maximalist. I think everything will come back onto Bitcoin ultimately, and that the most value will be accrued onto Bitcoin. Just kind of like how, like right now, for example, MakerDAO with DAI has eaten up about 2 million ETH and accrued that much value. I think in 5, 10, 20 years, Bitcoin would eat up the most value if you want to measure it by daily active value or monthly active value, or total active value, however way you want to put it. But I'm not very strong on that because who knows what's going to happen, right? We have an amalgamation of different interest groups here in terms of different chains and different developments and different directions they're taking. And I have no idea what's going to happen later on. So I'm pretty pragmatic about making predictions, even though I do have strong conviction in terms of being a closet Bitcoin maximalist.
Yeah, it seems like a very honest position to maintain. I think anyone who preaches an extreme with a very high degree of confidence is probably a good person to ignore. You lived in China for a while, where you were at either seemed like the trailing end of Snapcard to the early days of Wyre during that rebrand. This is just on your LinkedIn, but Beijing, you were there for 7 months. Was that working to grow the either Hong Kong or China project for Wyre? Or I'm really curious to hear what that was like.
Yeah. It just so happens that I'm Chinese American. I grew up my whole life in San Francisco. but I was able to maintain my Chinese. And for the past few years, my Chinese has gotten better from working with our Asian partners.
Do you mean just the language?
Yeah, just the language. In terms of speaking in professional business etiquette or about technical terminology, I was able to speak colloquially in Chinese before this. But like I'm saying, it just so happens that I'm Chinese, and the big three there with BTCC and OKCoin and Huobi in 2015, 2016 was really taking off. They were, each trading about a million Bitcoin per day. Whether that's wash trading or not is a whole separate story, but these are like juggernauts, right? The Coinbase of Asia. So, we started doing a lot of work with them. And, because Bitcoin wasn't explicitly outlawed in China at that time, we were using Bitcoin as a rail to do cross-border payments. And we worked with like a lot of top payment companies in China. We still do, but on a whole different level now. And because we had a lot of different kind of Western financial institutions that wanted to do payouts into China, we had to really build up that rail. So I had to go there locally for a few months to set up shop. We actually acquired a company called Remitsi, which was doing pretty much the same thing. With Neil Woodfine and Richard Bensberg. Maybe some of the listeners know who they are. They're pretty famous in the crypto space, or at least Bitcoin space, I think. So they were working on that. They were ex-OKCoin employees that founded Remitsi, and they were literally doing the same thing as what we were doing. So we acquired them, and they joined the team. They're great to work with on the enterprise side. And that's sort of kind of that time when I was there working with local payment service providers, and kind of working on the acquisition with Mike and Yanni for Remitsi. Just kind of deepening our roots in Asia, getting the office there. And the Beijing office is out of WeWorks, and we actually have like a hole in the wall in Hong Kong.
Yeah, interesting. What do you think most people don't realize about Chinese culture regarding cryptocurrency that I don't have much exposure to Chinese culture? In some ways, I feel China is, for as large as they are, they're just very culturally segmented from my worldview, just in terms of the internet exposure being the biggest one, and the fact that it's just difficult to communicate with people that speak a different language as well. But having lived there and having spoke the language and been focusing in cryptos it's a really triple crown of experience. I'm curious to hear what the people feel about it, if you got a sense from that while living there. Yeah,
definitely. So, I think the first thing that Westerners should know about Asians in general, or Chinese, is the concept of guanxi, which is relationship or connection, right? I think in the West, it's easy to kind of not know somebody and then have a business relationship with them, so long as it makes sense on a neutral grounds, right? As far as there's a product fit and the user wants it, and cool, we can form a relationship. In China, it's very different, right? So whether there is an actual objective fit or not, there needs to be an established relationship, and it's almost like kind of like a referral program in a way, right? So like, and certain degrees of separation, where Alice, and Alice trusts you, and I know you. And when you make that intro to Alice, there's already a relationship between me and Alice, even though I don't know her, right? So the way to do business in China, you have to go through those type of ties to have efficient and effective conversations. If you don't know the person and you just meet very objectively, I think a lot of times the conversation is going to drag on very long, even though sometimes because there's an objective fit, they will still use you, because it's kind of like a weird mix between old world thinking and new world thinking, right? I think like old world Europe will probably still think like that a lot of times in terms of relationship based the way things work, but in the new world, that's not how things work, and China is definitely embracing the new world in a lot of ways. So it's a mixture for sure. I think in who I have encountered in China, as far as within the crypto scene, I've definitely seen both. Right, where it's like, cool, there's something that we have in the US that you need here. For example, virtual bank accounts, and you are not able to create such a bank account on your own. We can create it for you. You are a payment company in China, and you have 10,000 merchants that maybe 3,000 of them sell on Amazon. Cool, we can help you. We can help your merchants to create that virtual bank account, and then kind of do like a cross-border settlement for them, right? And I have no idea who you are. I just cold outreach to you, and we were able to establish that relationship very successfully. And I've seen that. But on the other hand, I think more of the more effective conversations came from just those intros through grandstanding relationship.
And do you think does that help China? I mean, do you think that's social lubricant for business, provides more integrity or longer lasting or more effective, efficient, productive business relationships? Or do you feel like it's really a relic of the past that will inevitably subside?
Yeah, I mean, for better or worse, it's I don't think it's good or bad. I just think it's a different system of going about things. There's different efficiencies you could gain from it, as well as lack of efficiency, right? So, if you're trying to give face to someone who's actually incompetent, but you have a relationship with them, then that relationship is not going to turn out well either way. Whereas, if both teams are competent as to why this third party introduced you, and having that element of trust already established can make things a lot faster. So there's, pros and cons to both. And for what it's worth, China is definitely changing already in terms of just kind of becoming more of a law of the land, relatively speaking, more and more. But there's this tradition and this legacy that is hard to reshape, right? It's not so easy for people to change the way they do things when they've been doing it for thousands of years that way.
Yeah, it's a good point. When you say China is starting to change, are you indicating that they're more consolidating the centralized power of the government versus maybe the opposite approach would be distributed power, which is in some ways what the West promises, but who knows really for sure?
Yeah. No, I mean, I think, China has always maintained this kind of monarchical governance structure, right? Where Beijing or Nanjing or wherever the capital is maintains political control while providing a certain amount of freedom in the economy itself, right? So I think in that sense, China is even more capitalistic than the West in a lot of ways, because the West tends to regulate every industry very heavily nowadays. Whereas China, will maintain political control very heavily, but be pretty lax and liberal in terms of the economic development. But when it comes to crypto, though, they're not going to mess around with this, because you're talking about a national currency and threatening that, right? And that's why they came down so hard on it. Even though there are still a lot of crypto companies that are operating, that's not something that Wyre is comfortable doing after September 2017 because of the regulatory risk. There are a lot of crypto companies that are still operating in China in spite of what the government has said. And it has to do with what the government does in terms of their kind of flavor of the month, right? Basically, they have these kind of quarterly focuses on cleaning up different industries. And afterwards, they kind of are more relaxed about that industry that they just cleaned up. So it's kind of weird in that sense. So I think after September 2017, after the ICO boom and all that, there are still a lot of companies operating because the government isn't focused on that so much anymore.
Yeah, it certainly is interesting, right? I mean, there tends to be these waves of attention that go into regulating different industries or just changing the landscape of different industries from the perspective of the government. You see this in the U.S. with healthcare, and it tends to flow top down from Congress and what the initiatives are there and where people are generally putting their attention. And it's almost like if an industry doesn't get a makeover, then it's just on to the next thing. And there's sort of a cyclical nature to the changes that come about in different countries. And generally one of my theses is that in the U.S., where people are pretty myopic as to just look at the United States instead of look at the rest of the world. And it's not to say that the rest of the world doesn't influence the U.S. It does, but people don't necessarily appreciate that. And I think by opening your eyes to seeing what other countries are doing, whether it's in healthcare or finance or any other industry, it really helps to shape the trajectory of where things are going here in the U.S. So I always find it really interesting, especially having lived there. There's a whole different level of engagement. Even I'm sure being Asian American, it's just a much different experience when you're actually on the ground in China, talking to people there, and you get to see their day-to-day life and how they use money or how they think about cryptocurrency. My sense is that there is a greater excitement for cryptocurrency in countries that didn't have established banking systems, and especially the unbanked population. We actually just did an episode last week on the unbanked, and quarter of the world's population, a couple billion people being unbanked in Southeast Asia and Africa. I see them as being really excited about the potential for crypto. But, from a company's perspective, you kind of have to balance where people would get the biggest use from it, and then where the first place to start that economic engine is. And like you said earlier, the United States really has that going for it. That's cool. Yeah.
Yeah, I think in terms of banking the unbanked, right, it's a mixture of kind of like a social movement that propels businesses to provide those services, along with either government support or no government support, right? In Venezuela's case, obviously there's no government support for crypto, and yet it's still happening there in this huge social movement. You have to have at least two of three, right? In the US, what happened was there was regulatory certainty from FinCEN to regulate Bitcoin as money, and that gave one of three in terms of government support in that sense. And then there wasn't too much interest, I don't think, in terms of like merchant adoption or users actually buying Bitcoin until the bull run came in 2017. But at least we had the government support and businesses that were building. Right, so you have to at least have one of the two of three for things to be working. And for in theory, obviously for unbanked, if everyone already has a phone, then you can just have a wallet on the phone, and you can kind of bypass this. And it's kind of like, what's his name, the Alexander, the first move advantage versus second move advantage, 1840s, between UK and US or UK and Japan. There's a second mover's advantage too, to having not having that old sort of legacy tech or legacy financial infrastructure that you have to kind of fit the square peg into a round hole for it with blockchain.
Yeah. Well, awesome, Jack. I really appreciated you giving me this story of your experience at Snapcard and then changing into Wyre and what you guys are working on. And we didn't even get into the sale of the company to World First, but I'm sure that was a whole interesting story in and of itself. And hearing about China and the different countries, we covered a lot of ground today. And I really appreciate your time. Is there any last thoughts that you have about either yourself personally and what you're up to next, or what the company's doing? And then mention for people where folks can reach you or reach Wyre and contact you, whether it's Twitter, email, LinkedIn, whatever you prefer.
Yeah, I mean, personally, I think of crypto as a work of a lifetime. This is a generational play, and I don't see myself kind of pivoting to any other industry unless I move to Montana and start a ranch there for like a sustainable living or something. So I'm definitely going to be here. Been in this space since 2013. You can reach me at jack@sendwire.com. You can find us at sendwire.com, or you can check out our developer kits at docs@sendwire.com. And I think our Twitter handle is just sendwire, @sendwire. Yeah, so come find me.
Cool. All right, man. Well, I really enjoyed it, and we'll talk soon.
Awesome. Thank you, Mike. Thank you for having me.
All right. Bye-bye.
The views and opinions expressed on any program are those of the hosts, co-hosts, and guests appearing on the show, and do not necessarily reflect the view of the owners and producers of the show. Paid advertisements in form of audio announcements may appear throughout the show, including this one. Advertising can also include print and other digital formats. The owners and producers of Around the Coin do not endorse or evaluate the advertised product, service, or company, nor any of the claims made by the advertisement. All programs are subject to a one-time charge for professional editing fees, for which the interviewing guest or guests may have contributed towards. The owners, producers, hosts, co-hosts, and guests on the show are not financial advisors. Any investment advice or opinions cited during the show is for information purposes only. None of the content is intended to be investment advice. Seek a duly licensed professional for investment advice. If you believe there's been any violation of your copyright, trademark, service mark, or any other type of intellectual property, please inform us in writing by sending an email to legal@aroundthecoin.com.